Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have David Siemer, CEO and co-founder of Wave Financial Group, to discuss the biggest changes expected for the crypto and blockchain spaces in 2022, anywhere from regulation to adoption. David, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me. This is great.
All right, let's start with price predictions that you have for Bitcoin and Ethereum after what's been a pretty volatile month.
Yeah, it's been a little rocky, but it seems to be leveling off right now. I mean, your predictions are always a challenge. What we're seeing now is it's been amazing is institutional adoption that we've talked about in this industry for like 5 years has finally happened. 30 of the 50 largest financial institutions are actually offering Bitcoin products. With Goldman, Morgan Stanley on down, and we, and the ETFs are coming. So our own predictions are around 100K next year for Bitcoin, and probably closer to 10K for ETH. We're probably a little more bullish on Ethereum right now, just given where the network is in the adoption.
So on a higher level, what are the biggest changes expected for crypto and blockchain as we look into 2022 when we think about regulation, when we think about continued adoption and more products rolling out?
Yeah, I mean regulation is always the huge one in our asset class. I mean, China, did their darndest to crush the crypto space middle of this year. The US is not doing a whole lot better right now, but globally we're much more optimistic. So if you look at what's happening in Europe and Japan, Korea, Singapore in particular, and like Southeast Asia, you're seeing a lot better rules coming, more acceptance of offering these products, making these products proper for retail and things like that. So we're pretty bullish in general. The US is going to be a mess, and it seems like the US playbook or Genzo's playbook is basically to say really scary things all the time, but not give any clarity or actual, not give an actual path forward other than just like saying bad things. The rest of the world isn't really taking that tact. There'd be several million blockchain jobs created in the next probably 3 or 4 years even, and you would think they'd want those here, but other regions do want those. Starting with Asia, other parts of Asia besides China, and particularly Europe and South America, are very much more pro crypto than the US has ever been.
Right. So you brought up Southeast Asia, where we know that really is a hub for a number of these technologies. So explain to us what some emerging use cases are for blockchain, including the tokenization of assets and NFTs.
Yeah, I mean, tokenization of assets is coming, but I think it's kind of a minor factor right now. I mean, NFTs, I think are going to be massive. I think NFTs will, even in this coming year, probably dwarf the decentralized finance space and may eventually dwarf all of crypto. I mean, it's just, people love art, they love music, they understand it. It's something, NFTs are kind of the gateway drug our industry's been looking for. I call it like kind of its email moment, if you use the internet, analog. That really gets mass adoption going. Like people understand these things. Like telling people to go buy like a random token is kind of like giving an average person a hot stock tip. It doesn't mean much to most people. They don't play the market, but like NFTs people love, and the whole like Gen Z and how they view that part of, those aspects of those, those products, they actually own a part of a sports franchise or own part of a moment or own part of a, piece of art. And that's really, really powerful, and they get it. They don't have to understand layer 1 technology to get excited about it.
Right. So David, explain to us where Wave Financial Group fits within the ecosystem.
Yeah, so we're pretty simply kind of a modern asset manager that operates just in the crypto space. So manage about $1.5 billion AUM. We have a bunch of financial products. We have an NFT fund we just launched, the first of its kind. That's kind of a proper like Reg D, fund. We have a couple of VC funds. We have a bunch of structured products like index funds and derivative funds. We did launch one of the world's first, I think, spirits-based tokenized hard asset funds, whiskey barrel aging, kind of a fun thing. And then we also just have a wealth management platform exactly analogous to like a Goldman, kind of private wealth, kind of a white glove service where we manage clients' crypto assets and lots of strategies, decentralized finance, liquidity mining, staking, derivatives, whatnot.
So how should investors diversify their portfolios to gain exposure to crypto, NFTs, digital assets, and the products that you had just mentioned?
Yeah, I mean, for most of our clients that come to us recently, it's more of a toe in the water. Like they're just looking for kind of beta exposure to the asset class, like an index fund or these new, kind of the futures ETFs that are coming out. What we do is a little bit different for a lot of our products. We take more of a wealth management kind of yield maximization approach. Every asset in crypto is a ultra high yield asset relative to the stock market. You can stake even Ethereum now, almost every other coin. For our clients that just want Bitcoin, we wrap it in Ethereum and take it into DeFi, get them 4% more yield. So we look at ourselves more as like a yield and income generation platform around crypto. So we're a little bit different than some. Where people looking for exposure, I mean, I think there's a lot of funds out there. Again, I think most of them are going to start with the Bitcoin futures ETFs if they're in the US. And that's kind of a decent toe in the water. And once they get a toe in, they usually get excited.
All right, David, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much for having me.